How's it going, everyone? It's Sam. I am really excited because we are doing the next installment of our dividend series where we go from zero to hopefully $1 million. Now, I want to show that we can do this with just $100 a week because you don't have to invest large sums of money to be able to grow to $1 million. Now, we are not the only ones that are doing this. We also are doing this with JT Wealth and Logan Fisher. I'll put their information down below. You can see what dividends they're buying. And if you want to follow us along and invest every week, see what I'm investing and see what you want to invest and kind of build up your dividend income, get payments all the time from your dividends, you can definitely check out the link down below to M1 Finance if you want to try them out. I really like them for this challenge and just for this in general because they have drip investing, which is dividend reinvestment, and they also show exactly what your dividend yield is. You don't have to go to any fancy websites. You can just go to the research section of M1 Finance and see exactly what you should be able to get paid. So again, thank you guys so much for watching this. If you guys don't mind hitting the like button and the subscribe button down there, I really appreciate that. We're on the road to 45,000 subscribers, and I talk about other stocks too on this channel. I talk about growth stocks and all different kinds of stuff. And maybe M1 Finance isn't what you want. Maybe you want to sign up with WeBull and get 4 free stocks worth up to $1,600 for 2 of them. So you can get about $3,700 between all the 4 different stocks if you deposit $100. And if you want to know exactly what I'm buying in real time, you can check out the link down below to Patreon. So we are on the next week of this dividend series. We are still looking good with almost everything, actually everything exactly in green. You can see we haven't lost money on any single position yet. Now, we are buying a couple different stocks this week. I'll show you, and then we'll go through a stock that I like that I want to talk a little bit more about. So this week we bought 3 different stocks. We bought Foot Locker. Again, I just really like Foot Locker, especially with the holidays coming up. It's getting a little bit more expensive than when we started buying. We bought at $38.52 here. We were able to buy very cheap a while ago. I was buying when it was $19 a share. So it is more expensive, but I think it's a good long-term play. It pays nice dividends. We also have Qualcomm, which is the 5G chip supplier for the new iPhones. I think they're going to have a massive boom over the coming years with the 5G phones. And then we also have Store Capital. Store Capital, again, just one of my favorite holdings. They are able to charge higher rents. They are a REIT, so they're able to charge higher rents to their clients because they aren't typically as high grade tenants as what other REITs go after. And they're also able to make sure that every single location that they have makes money. So they are able to provide really good returns and they pay a really nice dividend. So we haven't been adding many positions to this portfolio. We've just been adding on our current positions, but that's because I really like the ones that we have. So you can see here that we have about a 3.07% dividend yield. Pays pretty nicely. Right now, that means that we're getting about $78 a year in dividends, which might not sound like a lot, but we've built this up just $100 at a time. We have nice returns, so we cannot complain about that. We could also buy more stocks that are high yielding if we wanted to. Now, the stock that I want to talk about today is JP Chase. In financial education, one of the largest, if not the largest stock-oriented YouTubers, made a video on JP Chase yesterday saying that it was an easy money stock. Now, I've been saying this for a while, but I really like JPM. I really think they're a good company. You can see that they're $140 before, and now they're still down about 12%. They pay about 3% dividend, and this was up to maybe about 4.5% when they were around $80 a share. I personally have been buying them for a while, but I think that my conviction is stronger than ever, and I'll tell you a couple of those reasons. First of all, they're pretty much backed by the U.S. government. I've been saying this for a while, but the government is not going to let them fall if they do terrible for some reason. They're one of the largest banks in the world, the largest bank in the U.S., and they have total assets of $3.2 trillion. They're not gonna go bankrupt or anything like that. The government's gonna bail them out. The other thing is they produce massive amounts of income. So I've talked about this for a while, but they have such high net income. You can see here they were expecting to lose money this year, or some people were expecting them to lose money. In this last quarter, they were able to bring in $9.4 billion in net income, beating analysts' expectations by a good amount. $9.4 billion means that on a forward PE basis, they would be around a 10 because Again, that's $36 billion in net income. They're a $370 billion company. That puts them above a lot of other people. That puts them in a very high class for net income. Compare that to some of its peers out there. You can take a look here. This is AssetDash.com. They're a partner of the channel. They are able to track different stocks in real time, and you can see how they all stack up compared to each other in market cap and price, what they've moved up during the week and during the day. Take a look. JPM is 13th on here. Oh, by the way, AssetDash, there's a link down below if you want to play around with it. Take a look at it. They also have earnings on here too. So JP Morgan is 13th. They're the 13th largest company on this list of all the companies in the world in terms of market cap. Now, take a look at it compared to something like Johnson & Johnson, which Johnson & Johnson is $23 billion bigger. But let's take a look. Their net income last quarter was $3.5 billion. That puts them around, $14 billion in net income. That would put them at over double the PE ratio of JP Morgan. Again, that would put them at a very high PE ratio, even if we compare it to something like Apple or like Amazon, two of the biggest companies in the world. Take a look. Apple, 30.4 forward PE ratio. Amazon, 60.4. So a lot of people are buying these companies, but not too many people are buying JP Morgan Chase comparatively. JP Morgan Chase also has a lot of money stored up just in case there are defaults on loans. Now, you can also see their dividend growth. They've been consistently growing this throughout the years. So while it's paying about 3% now, it's going to increase most likely. You can see here it went up 10% or so. The year before, it went up even more than that. It went up, 20, 25%, something like that. So if they're able to raise it another 10% next year, then we're going to begin a 3.3% dividend yield. That's very attractive. I think this is, like Jeremy says, an easy money stock, and I will probably buy more of it. I've been considering dumping a lot of money in it just because I have extra money in savings right now. So I might do that in a different portfolio because I don't want to break up this $100 a week. But definitely check this company out if you haven't done that already. Now, again, we're just adding to this every week. If you want to follow us along, check out the link down below to M1 Finance. It's definitely worth doing. Just throwing in $100 a week can help you so much. It can build up so much over time. And by the time that I'm 60, I should have $1 million in this portfolio based on compounded annual growth rates. So definitely try to do this along with us. And if you want the 4 free stocks instead, or maybe you want to do both, maybe you want the 4 free stocks and then you want to actually invest in this account, you can check out WeBull in the description below. Thank you guys so much. I really appreciate it, and I will see you in the next video. Bye.